Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, definitely hit like and also hit subscribe so that you can see future videos as well. So there's been some crazy stuff going on in the stock market world these last just 2 days really. The market's been all over the place. We had like a plus 2% session in the US 2 days ago, and then a minus like 2 or 3% session across the major indices just overnight. So crazy stuff happening over there. And in Argentina, we had the second biggest one-day stock market crash in history. So the Argentinian index dropped about 40 or 50% in a day. Absolute, crazy mania stuff going on. So I thought I'd step things back and give you guys a bit of a lighthearted article that I came across the other day, and just to give you some confidence that although there's a lot of high IQ individuals out there in the stock market, there's also some people making some pretty dumb mistakes as well. So I found this article pretty funny, probably not that funny for the people involved, but you can make your own decision on that. So I'm going to link the article down in the description below. I'll put some screenshots of it here for various parts as well, but let's get into it. So if you saw the title of the video and the title of the article as well, Ford investors go out and buy Ford thinking that it's Ford, or something along those lines. So what the heck does that mean? What's going on here? Basically, there's two companies in the States called, well, there's two called Ford. They have actually slightly different spellings. So the first one you're probably all pretty familiar with, and that is the Ford Motor Company. So, they make basically Ford automobiles. They make Ford utes and cars and all sorts of vehicles. That is basically the company that all these investors are trying to buy shares in whenever good news comes out. But what was happening is whenever good news came out about the Ford Motor Company, this other company called Ford Industries, spelled F-O-R-W-A-R-D, rather as opposed to F-O-R-D for the motor company. This other company called Ford Industries was always seeing a sudden spike in their stock price, and everyone was like, what's going on here? We haven't released any good news. We haven't done anything particularly special today. There's no analysts out there upgrading the stock and saying it's a buy or anything like that. So what's going on? And basically what it was is Ford Industries, F-O-R-W-A-R-D, Ford Industries, has the ticker symbol F-O-R-D. So when you go onto your brokerage site and you go to type in the name of a company to buy shares in, you see F-O-R-D pop up, and all these investors were thinking, great, that's the Ford Motor Company, let's buy some shares. They failed to register that the share price of $1 is way different to the share price of Ford at like $9 or $10 or whatever it is at the moment. They went through with it regardless and accidentally bought the wrong company, which is pretty insane. So it's cost more than a couple of $1 million in brokerage fees for people to reverse these transactions, get back out of Ford Industries, and then go invest in the Ford Motor Company. So if you're not aware, basically Ford Industries has the ticker symbol F-O-R-D. That's the mistake people were making. The ticker symbol for the Ford Motor Company is simply just F. They don't have a long, extravagant ticker symbol or anything like that. And it looks like F-O-R-D must have been reserved when they tried to pick their symbol. So just F if you want to buy into the Ford Motor Company. So pretty crazy story. Just goes to show that you can do all the research in the world and you can make a single dumb mistake and then obviously have some quite adverse results with your investing. So thought that was a quick entertaining story. There's probably a couple of other things I'd put in this kind of stupid mistakes basket. The other pretty obvious one that comes to mind is people like putting in the wrong prices and things for shares and using a limit order rather than a market price. So basically whenever you go to buy shares in a business, you've got two sort of ways that you can place that order. So first off, you can say that you want to buy a certain number of shares or a certain dollar amount of shares depending on the brokerage. Just at the market price. So as soon as the market opens up for that day, it will just buy you X number of shares, whatever that works out to be, based on how much you want to invest and the current price that those shares are trading for. It'll just buy them for you, and it's hard to get caught out on that one. I suppose it's hard to make too big a mistake on that one. But there is a way that you can make a mistake on doing a limit order. So what a limit order is let's say shares are trading for $10 a share, and you only want to pay up to $9.80 as an example. So what you can do is you can put in the number of shares you want to buy, the limit price, and then place an order that way, and your broker will basically try and get you those shares as cheap as they can below that limit, but it will continue to buy them to fill that order up and up to that kind of limit price of $12.90, or I think I just said, whatever the price I just said was. Basically, it'll keep buying up until that price. So when you make a market order, pretty hard to go wrong. I would say when you make a limit order, it's probably not uncommon for people to make mistakes. I'd be surprised if that hadn't happened before. There's definitely brokerages that have some kind of fail safes in place if people try to, buy one share for $100 rather than 100 shares for $1. I'm sure there's some fail safes in there with some brokerage sites, but others there's definitely not. So watch out for that. Avoid making these stupid mistakes. Investing in a lot of ways is about keeping your error rate low rather than trying to smack things out of the park. With everything that comes along. You don't necessarily have to double your money on every investment or whatever it is. As long as you can avoid losing 50% of your investment on more than the majority, you're probably going to come out okay. And that's basically the core tenet of value investing, is not lose money. It's rule 1 from Phil Town, all those sorts of things. So thought that was an entertaining story. Hope you guys enjoyed it. As I say, the article is linked down below. If you did enjoy it, hit like, hit subscribe. You can watch other videos. I always get this the wrong way around, but I think you can watch other videos over there and hit subscribe over there. If not, it'll be the other way around. So check those out. Have a great day. See ya.